Sup market people? I would say sup traders, but man, I'm kind of reframing. You guys know I've taken a break from the markets, from trading, and I'm wanting to come back something closer to an investor. In this video, I'm going to break down my biggest learnings and lessons from 2024 and take stock of what I have going into 2025, and also share with you a little bit of my money management business plan going into 25. Okay, you ready? Let's go. I couldn't turn around till we were upside down. I'll be the bad guy now, cause I ain't too proud. I couldn't be there, even when I try. You don't believe it. We do this every time, and seasons change, and I love when cold. Feed the flame, cause we can't let it go. Run away, but we're running in circles. Run away, I dare you to do something. I'm waiting on you again, so I don't take the blame. Run away, but we're running in circles. Run away a little bit more. Maybe you don't understand what I'm going through. It's only me, what you got to lose. Make up your mind, tell me what are you gonna do. It's only me, let it go. Seasons change and I love when cold. Feed the flame, cause we can't let it go. Run away, but we're running in circles. Run away, I dare you to do something. I'm waiting on you again, so I don't take the blame. Run away, but we're running in circles. Run away. Okay, good morning. It's sun shining. Actually, just got a workout in. Walked the dog, did vocal exercises, getting ready for breakfast to go to work on the marine vessel. So it's been over 2 weeks since I've logged off from the markets and not come in, logged in. And it's given me a lot of time to think about the past 4.5 years of trading when I started. This year, my plans for the future. And I'm really enjoying the time off. I'm being very productive. YouTube's taking off. I feel healthier. My sleep's better. I'm a little bit less stressed. I am processing trauma over, if I just had done what I've done, I would have made so much money. The year actually would have ended in profit potentially. But it's all good. I'm not starving, right? I'm kind of thriving, and we'll come back and we'll take stock of that. But yeah, I mean, I have, not even counting trading, I've got 1, 2, 3, 4, like 6 sources of income, and none of them are huge faucets, but that's where you want to be. If you want to feel financially secure, I feel more financially secure with like 6 small streams of income than one massive trading nest egg. The trading nest egg, it's like, man, I could lose it, or I could not make that much money, or my money could go down. But when I have consistent income coming in from different sources, it's a lot less stressful. So I'm super grateful for that. I've got my marine wildlife tour job, which is awesome. I love it. I'm in the water with dolphins and sharks and whales. I have my hiking adventure tour, which is really fun. I meet people from all over the world. I have my 2 different YouTube channels, and then I've got coaching sales, I've got course sales, and the ad revenue from the YouTube. So a lot of different sources of revenue. And trading is another one potentially, but I'm getting away from trading. I don't want to think of trading as a source of revenue. I want to get back to thinking about investing as a way to build my nest egg, right? So I'm thinking, and when it's about growing what you have and you don't need, it's way less stressful, right? So I'm thinking about just reframing things like sub traders. No, I don't want to encourage trading. You guys know, like, this channel is so negative on trading. It's called Travis Wu Trades. I may change it to Travis Wu Invest. That said, I do plan on keeping elements of trading, which we're going to get into. But as much as I can say, okay, honestly, I've only had 4 complete calendar years, not calendar, but 12-month cycles trading. Profitable the first 12, profitable the second 12, profitable, unprofitable the third and fourth years. And I'm looking back on it and like it's a huge waste, whatever. But a couple things. First is I've gained a huge amount of trauma, and it is going to be extremely valuable moving forward because the PTSD makes me extremely cautious with the market and about money opportunities, where I'm seeing, right, as I'm recording this, the market's at new highs, everybody's euphoric and they're making money, and that's great. But there's going to be a time when the market turns, and there's going to be again a time to do nothing where there's a lot of danger. And people who haven't learned that lesson are euphoric. A lot of them are going to give everything back. So for me, I am looking at my trauma that I've accrued, the pain that I've realized, and it would have been nice if I could have got that pain and trauma earlier in life or learned faster, but it is what it is. I'm a slow learner. I'm in my 30s. I started in my 30s. It's all good. So that pain and trauma is like a shield and armor to protect me from the euphoria of trading in the market. Now, a couple of the things that were really valuable for me this year were, coming into this year, I believed that manual backtesting was a valid way to test strategies. And I learned that it was not. And because of psychological pitfalls, and I learned a lot more about psychological pitfalls, emotional thinking. You start with emotional thinking and then it becomes rationalized with logic. So you may have the most logical reason in the world to put on a trade, but it's originating from an emotional desire. So it feels logical, but it's coming from emotional. And the same thing when you want to test trading systems manually, you think that since you want to see it succeed generally, these unconscious biases that cause problems. So you need to learn how to computer backtest. And I was able to do this year through the help of a couple other people, put my systems into computer backtested, and create some really wonderful trading systems based on fundamentals, which I'm going to come back to in a little bit. Now, I also, while I lost a lot of money this year, I lost money in new ways, right? I lost money in new markets and trading in new ways. I lost a lot of money trading with algos. I took a 2-month investing break in April and May, I think, or May and June. I didn't do any trading. I think, 2 months. And it was, I had algos running, and we had a model that showed the max historical drawdown was X over a 10-year period. And we immediately hit the max historical drawdown in the first 2 months, which was like, either we're incredibly unlucky or the system is broken. And I started looking into, well, what makes this trading system strong? I didn't know this before this year. What makes this system robust? What makes this system fragile? A fragile system is you change any one thing and it no longer shows profitability. You change the asset, it's not profitable. You change the time frame, it's not profitable. You change the size of the stop, is not profitable. You change the trailing stop, is no longer profitable. You change the TP, it's no longer profitable, right? That's a fragile system. A robust system is you change the asset, still profitable. You change the stop loss, it's still profitable. You change the entry criteria, still profitable. You remove a filter, add a filter, is still profitable. The profitability might vary, but it's more profitable or less profitable. More profitable, it's still profitable, right? Whereas with a fragile system, you change anything, it breaks. So it turned out the algos that we were trading were fragile systems because you took that system and you simply changed assets and it didn't work anymore. And the expectancy of the trade was too low. So it looked like it was a bunch of different systems trading at the same time, and it was nice, hedged and diversified, but it was all noise. None of them were actually good. And there's also, coming back to starting from fundamentals, those algos were quote unquote data mined, those strategies, which was just mix and matching parameters and finding something that worked. Systems are much more likely to work when you're coming from a fundamental idea and then you're coming in and testing it, which is great because I'm good at fundamental ideas. Again, I didn't really know this coming into this year. So based on this, the system that we created that I have coming into 2025 is it's robust because instead of optimizing for one particular time frame, one particular asset, it has historical backtesting across gold, across NASDAQ, S&P 500, Dow Jones, silver, Bitcoin, ETH, Solana, combined going back hundreds of years. Not only is it profitable in all of them, but it beats buy and hold on all of them with the same parameter settings. and I can change the settings to optimize to make Bitcoin even better, or make gold even better, or NASDAQ even better. But I know not to do that because I want it to be robust and be likely to work in the future. So that's an incredible, powerful tool coming into 2025. That said, we developed this system around June, July. I launched it. I don't think anyone traded it. I didn't trade it, actually. Why didn't I trade it? It sounds so good. Why did I not trade it? Well, I had certain conflicting beliefs. I was still getting over trading addiction, which, hey, I could still relapse into that, but and wanting to trade every day and look every day. Part of it was wanting to, just impatience and greed, wanting to, and allowing compulsion to take over. But a lot of it was just, it's too slow. I'm impatient. I want to make more. I want income, not just grow, right? But my experience the past 6 months is the forward testing that came out after we produced the system is amazing, slated in every asset, while I'm over here spending a lot of time and losing money. So one of the things that I learned also coming into this year is I had a belief that it was a reasonable thing to do to trade every day. Like, put all your eggs in one basket, watch the basket closely. Not trade every day, but check the portfolio every day. And what I discovered later in the year is, one, it doesn't work for me, but there's actually research that says, hey, the best market performers only look at their portfolio once a week or less. The worst market performers are the ones who look at their portfolio every day, multiple times a day. And I look back to the first couple years of trading where there's warning signs. Even though I was making money, I was checking the Bitcoin price 60 times a day, right? It was unhealthy and it was leading towards some kind of trauma or burnout that I experienced one way or another. So one thing that I look at is through the losses and the pain and the trauma, it has freed me, where I realize I can perform extremely well manually trading or manually managing my portfolio on average of once a week, and I'll actually do better, and that'll free up a lot of time and mental space. The reason why trading more frequently is associated with more errors is because, or looking at the portfolio, checking your portfolio is a sign of being impulsive, and impulsive checking leads to impulsive trading, closing positions too early, putting them on, reacting to short-term market swings. You could describe it as cognitive overload errors. When there's just too much going on, you begin to make errors. So when you check very rarely, you are much less likely, right? Especially for investing, you don't necessarily get the perfect entry point. You may need to be underwater for some time. You cannot look, you cannot watch. You also need to be okay with letting it run. Come back and check in a week and see if it's ran, right? So this is something that I didn't have coming into this year. I didn't know for sure. For me, I thought every day is good. And I also, I had designed my systems to trade, to check every day. And I didn't know that there's actually research saying that that's the wrong thing to do. So coming into 2025, I have this trauma to protect me. It's an armor. I still have over a year in expenses ready to deploy in the market. I now have, coming into this year, I only had one income stream plus trading. Now I have like 6 income streams plus investing, right? So I'm in a better financial position, even if I have less money. I have more time. And here's kind of my business plan that I'm going to share. And I'm going to share this more later, in a more professional way, probably. But I'm kind of putting it together. So the fundamental, I'm going to make it as succinct as possible. The fundamental is that the dollar, fiat currency, depreciates over time. Harder stores of value appreciate versus the dollar over time. The best of these being, and most liquid of them being gold, Bitcoin, and the stock market indices. You could also put real estate in there. I'm choosing not to trade real estate because it's not liquid. And also I suspect with the boomers dying off, millennials and Gen Z not having a lot of kids, and this happening around the world, that real estate prices are going to come down in real world terms. And it's going to be better to invest in these other vehicles. Now, so it's long only strategies on Bitcoin, maybe I pick Solana, but either at most 2 crypto coins, 1 stock market index, and gold to start. Now, so it's a little bit diversified. It's looking at three different assets that are bullish long term. I believe that leverage can be used. Leverage and combination of leverage and market timing can enhance gains, potential gains. Okay. Also believe the use of a stop loss and a bear market filter, which in this case is a 200 moving average, is a way to protect from larger drawdowns of major bear markets or dying assets. So we're going to use a stop loss, but not a TP. The entry criteria, I'm not going to share the historical backtest here. There's a link to it down below, and I'm sharing a lot of videos on this probably by the time you see it. But I'm going to cut the scheduling. The scheduling is going to be, I'm going to come in the end of the month or the first of the month, mark the levels where a trade may occur and set an alert, and then plan on not trading every day. I know on average, a particular asset trades maybe 12 times a year or once a month using this system. So I will expect if I trade, say I trade just the 3 assets plus the first trading day, that would come out to 4 trading days a month. So on average once a week, although it wouldn't be scheduled. The only thing scheduled would be the first, right? I get an alert on the email and it's no rush. I come in. I have the historical data for it. And then also for hedging, I have the altcoin short strategy. The problem with altcoin short strategy is that does require checking daily. However, the solution for that is actually coded, and I'm going to profit split with the quant who's coded that for me or for us. And then I'm also open to additional algo strategies using perpetual futures, which will be a profit split over there. So I have a system and I have a scheduling plan, and and then for me personally, I can fund it through what's happening through YouTube. YouTube's my play money, right? And the courses and the coaching. And I can invest. So it's closer to investing because it's long term. The average hold is 90 days for this system, and the average winner held is maybe like 180 days. But it's trading because there's a stop loss, there's leverage, and there's market timing. But it's somewhere between trading and investing. So I wouldn't even call it swing trading. It's closer to trend following. It's a form of trend following. So anyways, I'm actually, after 2 weeks and a lot of pain, I'm feeling a lot better about things. By the time you see this, I'll probably have logged back in already, but I'm planning on tomorrow starting to set things up and share more and share more about the system. So again, there's a link to it down below if you want to check it out. I got to eat breakfast, get ready for work. Appreciate y'all much. Love. Talk to y'all soon. Peace.